Yeah, good morning, everyone. Uh, we had seen yesterday US market correcting. In fact, it opened positive, but during the day it declined sharply, mainly on account from comment from Fed, which has indicated that in the next meeting, that is in May first week, the rate increase will be around 0.5%, and has indicated that controlling inflation is absolute priority. The perception of increase in interest rate by 0.5% has increased to three times in coming year. Instead, earlier the perception was that the interest rate will increase by 0.5% two times. So that has had impact on the bond market as well, and the bond yield moved up to multi-year high, and now it is at around 2.95. At the start of the year, that is in Jan, it was at around 1.5%. So there is a very sharp increase or almost doubled bond yield. So that is also playing its role on the stocks which are more leveraged towards higher valuations. Taking clue from the US market, even the Asian markets are today morning trading lower by around 1 to 1.5%. And also, if we see the commodity is not reflecting so much pain, but still, steel and iron ore are down by around 1%, and copper is down by around 0.5%, whereas aluminum and oil are flat. So we had seen yesterday up move in the in the Indian market as well. So taking clue from the international market, we may see some corrections here also. If we talk about the results up till now, we are seeing downgrades in the earnings of various corporates, starting with HDFCs and Infosys, and then now we are seeing most of the IT companies are seeing earning downgrades. Even today also we are seeing that. So overall results from the India perspective are not so great, and they are coming below or are leading to downgrades in the earning in the coming period. So need to be cautious in the market in that light. Now request technical team to take up from here.
Thank you, sir. Good morning, all of you. Yesterday we see the positive momentum and Nifty managed to sustain 70,330. But today, after global cues, Nifty open a gap down and trading near the next important support zone, that is 17,200. If Nifty today managed to sustain these levels 17,200, then we expect some sideways momentum in that support zone, and upside immediate resistance place around again 17,330, 17,317 upside. Next important resistance place around 17,470, and below 17,200 next important support zone is 17,120 and 17,000 at downside. Bank Nifty also see the positive momentum yesterday and trading near the resistance, and that is we already mentioned that 37,800, 37,900 in upside. 36,900 in upside. To Bank Nifty again managed to sustain 36,600 and above range. Then we expect the Bank Nifty also trading near the support zone is 36,600. Below that, we expect further sell off towards 36,250. If today's weekly close managed to sustain 36,600 and above level, then we expect sideways momentum. Next important resistance place around 37,160, 37,400 in Bank Nifty. Nifty Finance also trading the near the resistance zone, that is around 16,800 and 717 upside. And immediate support place around 16,700 at downside. Below that level, 16,620 and 16,470 is the next important support zone. In stock specific, Tata Power looks positive at current level. We already see the positive momentum. About 250 is looks positive, and if managed to sustain 250 today's session, then we expect momentum will be the continue towards 270, 72 in upside. Support place around 245. CDSL also looks positive at current level. We already given call in CDSL, trading in oversold zone, and RSI showing the positive momentum in CDSL. To expect upside target around 1500 and above, and support place around 1410, 1400 in downside. That's it for technical derivative I can carry.
Yeah, thank you, Vikas. Good morning, everyone. So, as per derivatives data, we have seen in yesterday's trading session that major buying has been witnessed from the mid-cap and small-cap front, while from the F&O front, we are seeing that the Nifty has performed very well. As I mentioned in yesterday's trading session, once if Nifty goes above 17,350 level, then we might witness a buying momentum to get generated strongly in the market. But the current scenario, as per in today's, we are seeing that the SGX is likely to open around 200 points on the lower end, while on the other hand, we are seeing that the Nifty has having a strong support at 17,000 level. Currently, we are witnessing the 17,000 strike to be holding as a highest put at a positions. So currently, till the point of time, Nifty is having this support above 17,000 level. Till that point of time, you should hold a long positions with the support of 17,000 level. Currently, on the downside, we are seeing that is below 17,000, 16,800 would be a possible target. But we expect, as per the stock momentum and the stock strength, we expect the market to remain positive. Once if Nifty gets settled in today's trading session about 17,250 level, again, then we might witness the buying movement to get generated. And again, the negative front, which we are getting open in the today's morning front, we might get a pullback covering till today yesterday's level. So currently hold a long positions. While PCROI also gave good closing in yesterday's trading session, it was around 1.14. So current support for PCR would be 0.98 level, while India Wix is continuously coming down for the last 3 to 4 days. So currently the two factors which need to be kept in your mind is PCROI support at 0.98 and India Wix about 20 level. Once if India Wix goes about 20 level, then that would be a cautious sign again in the market. But currently hold a long positions till the India Wix is below 20 level and PCROI is above 0.98 level. As per stock specific and sector specific, we expect 2 to 3 sector which looks positive. First one is realty and auto. These two sector looks positive. Selective counter from these two sectors. First one is Maruti, looks positive. Godrej Property looks positive, and other two counters which we are witnessing a strong OI positions getting added up in last two trading sessions is Sun Pharma and Tata Power. These two counters has given a major breakout in yesterday's trading session. So keep watch on this counter. Thank you.
Good morning. ICICI Lombard General Insurance result improved marginally. The premiums increased by 34% year on year and were flattish quarter on quarter. Although market share has slightly declined to 8.1% versus December quarter 8.3%. The combined ratio is seeing a gradual improvement with every passing quarter. It has now reached 103% against December quarter 104.5%. We expect premiums to grow at 15% CAGR for the company in next 2-3 years, and similar kind of stock returns can be expected. CRISIL Limited result has improved. Company has been posting good results for a few quarters now. Revenue increased by 20% year on year. EBITDA and profits grew faster by 33% and 45% because of operating leverage. On revenue front, what has driven this growth is research, which is 2/3 of the business and grew the fastest at 26% year on year. The growth, year on year growth here is witnessing an accelerating trend in the last 5 quarters if we see. While the ratings revenue, which is around 28% mix, continues to grow at around 10% since last few quarters. So overall, we remain positive and expect the stock to continue its steady up move and outperform the market. Rajaratan Global Wire result was okay. and it was expected that EBITDA remained flat quarter on quarter because of capacity constraints. And we expect next quarter also, that is quarter one, to be the similar kind of EBITDA level. However, contribution from additional capacities in Thailand and India will start coming from quarter two, and this will drive around 25% volume growth in FY23. India capacity post debottlenecking will increase from 60,000 tons to 72,000, and Thailand capacity will increase from 40,000 to 60,000 tons in quarter two. And beyond that, if we look post FY23, the Chennai plant will commence operations gradually phase-wise, and so then onwards, one can expect around 15 to 20% kind of volume growth post FY23. So stock is currently trading at 20 times FY23, and we remain positive on it. If stocks corrects to around 500 odd levels, then we feel one can buy the stock with a 1 year target of around 840 rupees at 25 times FY24 EPS of 34 rupees. That's it from my side. Thank you.
Yeah, apart from this, Sterlite Technology has said that they will be raising fund from equity perspective. That will, in fact, the management has also said that they are looking to raise fund in 3 business segments separately, and had given very optimistic outlook of valuations of around $2 billion for each of the business. So currently, right now, the market cap is at around 8,000 crores. So that looks very exorbitant. But anyhow, the fundraising will have a positive impact on the share price in today's trade. Then L&T Technology came up with the results. The results were more of a in line. The CC revenue growth came in at 3.6% versus expectation of 4%. And margins were also in line at around 18.6% versus 18.5%. But the key thing is that the market was expecting FY23 growth of around 20% plus. But the management has given guidance of around 13.5 to 15.5. So that has led to decline in growth expectations for the company in the coming period. For the margin, they continue to guide at 18% plus margin expected in the FY23. And even the order book is also quite strong. They won one large order in this quarter of around 100 million plus $120 million that will be executed over a period of 6 to 8 years. But because of the growth guidance that indicated that the management is cautious, though there is a demand side, there is no issue, but supply side company is seeing some issues, and that has resulted into lower guidance. And because of this, the stock may see some corrections in today's trade. Long-term outlook continue to remain positive on the stock. Then HCL Tech also came up with the numbers. The numbers were results were in line with expectation again. The dollar revenue, CC revenue growth came in at 1.1% versus expectation of around 1.4%. The lower growth in this quarter was mainly on account of their product business, which grew very fast in last year. It's a more of a seasonal business. Fourth quarter, that is December quarter, is always very strong for product business. And if we exclude product business, the service revenue grew by around 5%, which is very good considering the growth of the other company as well. So results were in line, and margins were also stable in this quarter at around 18% versus expectation of 18.2%. So overall in line number, and the outlook is also more of a positive for the company. And Tata Communication came up with the numbers, and the results were below expectations. We had seen margin coming under pressures. EBITDA margin came in at 24.5% versus expectation of 26.1%. So that will have some negative impact on today's trade. And even Rallis India has done very bad in the results. results. They had reported EBITDA loss in this quarter. The revenue also declined, came up around 7% year on year, but below expectations of around 523 crore. They reported revenue of 507 crores. EBITDA margin came in at negative 0.6%, though it has some one-off of around 7 crore rupees. So even if we add up also, then also the margins are likely to be around marginal 1%, whereas expectation was 5.3%. Management has given indication that increasing cost of raw material, increasing cost of power and fuel, and also logistic cost is impacting the margins. So they are gradually increasing the prices, but it will take a lot of time. So the stock can be under pressure. And Cyient also came up with the numbers, and the numbers were more or less in line with expectations. Revenue growth was degrowth of around 0.5%. The expectation was of around 1% degrowth. Company has guided for revenue growth of around 13 to 15%, which was expected and was in line with expectations, and also margin range what the company had given is at around 13 to 14%, and FY22 the margins were at 13.9%. So more of a in-line set of number by Cyient. Now results for 26th. The expected results on 26 is Atul Limited is likely to report numbers. Numbers are likely to show improvement. Revenue is likely to grow by around 29% year on year. So margins are likely to come off from 22% to 19.6%. But what we are seeing that since last 3 quarters, the margins are gradually improving. It has come up, come low at around 17.5%. From there, it is gradually improving, and this quarter is also showing some improving trend. Then KPIT Technology is likely to report number, and here again the results are likely to show improvement. Revenue growth of around 5.2% quarter on quarter, and stable margin is expected. Then Microtech Developer, that is Lotha Developer, is also likely to report numbers. We had already seen that their order booking, their pre-sale booking has come very strong in this quarter, increased by around 36% year on year and 32% quarter on quarter. So that is the key thing to watch, and which has already been declared by the company. So likely to be show improved. And Mahindra Logistics is also likely to report okay set of numbers. Margins are likely to remain stable, and revenue is likely to grow by around 14% year on year. Sanofi is likely to report flattish number. And Soam Distillery is likely to report the improved set of number. Generally, their fourth quarter and the first quarters are the key quarter for performance, and which are showing a positive trend. But on the other hand, United Breweries is likely to report declining set of numbers, mainly on account of decrease in the margin. Last year, company reported 17% EBITDA, which is likely to come off to around 14% in this quarter. Revenue is likely to grow by around 12%. AU Small Finance is likely to report number, and the results are likely to show good improvement. The PBP, that is profit before provisioning, is likely to grow by around 29% year on year, and slippage are likely to remain stable. Bajaj Finance, we had already seen that the company has given a figure of increase in advances, which grew by around 6% quarter on quarter and 24% year on year. NII is likely to grow by 20%. PBP, that is profit before provision, is likely to grow by 36%, and PAT is likely to increase by 81%. So results are likely to show improvement. Then HDFC Life is also likely to report okay set of number. APE, adjusted premium equivalent, is likely to grow by around 5.5% year on year, and VNB is likely to grow by around 7% year on year. So this set of number. Then Nippon Life is likely to report improved set of number with revenue growth of around 22% year on year, EBITDA growth of around 39% year-on-year, and PAT growth of around 22% year-on-year. So that's all from us. Thank you very much and have a good day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.